Welcome to the July 20th, 2020 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your fast-paced weekly tour of the global financial markets that you can't get anywhere else except YouTube McGowanGroup. We're glad you've joined us. I'm President, McGowanGroup Asset Management. Special shout out to the team that cares, hard at work each week to bring you the best charts. That's Stephen Norris. Izzy Sanchez, our Chief of Compliance, is also, fortunately, an audio-video expert that makes the production better each and every week. When you tune in, what you're going to find is a fast-paced graphic tour of the financial markets that helps to make great decisions with insights into investment strategy. McGowan Group team with the research of Alex and Andrew and Harrison and of course Joyce, Karen. The team is hard at work each and every week to make things happen for the clients. Yes, the excellence in service and seeking superior profits for our clients with moderate risk, meaning yes, there is some downside volatility, but it also says we've got some great opportunities as a result of what's happened here. This is Dow Jones Industrial Average over 4 years. Notice we're sitting similar to levels that we saw at the beginning of 2018, essentially 2.5 years of flat. Range bound is what the traders call it. Notice this spike right here, and we didn't quite reach it this week. That's a significant technical failure, which means we could be stuck in irons for quite some time, and the earnings certainly tell us that. These are the S&P 500 earnings. So it's about $3,200 for the S&P basket, and they make about $40 per share per year. Notice this drop off right here. That's the second quarter damage we're getting right now in July. The good news is economically the numbers came in this week better than expected, the theme of this week's program at NetWorthRadio.com. But this drop right here is the bad news of July. What we're seeing in the earnings reports is reflected in a drop from $40 per quarter down to just above $25. We'll call it $26. But that reduction is a near 40% temporary reduction in S&P earnings. Is this too optimistic? Those are the forecasts from Bloomberg on corporate earnings. It actually puts earnings potentially at a new high late in 2021. Now, whether they reach it or not, we're not sure, but anything over $40 would be record earnings levels. And of course it ends at about 45 sometime in 2022. I don't want to be dependent upon that because we're in this recovery phase, and it's going to be a market that I think splits very differently in the future. Here are some insights into valuations. Well, right now we've got some inflation returning. This is a measure that is very important. We have returned to year-over-year inflation, and that could really foretell a shift in the different sectors of the market. So inflation coming back, we're seeing it in commodity prices, including metals, copper approaching $3 a pound. That's more of a bullish read on the global economy, by the way. Of course, gold has been on fire because there's not much else out there that is considered a hedge, and even Bitcoin getting into a rally. But there's an inflation prep going on in the institutional money flows. Now, here's the GDP figures. The damage as we go forward, if we look at this quarter, minus 33.7 for the second quarter announcement. Third quarter projections, 18%. That had been as high as 20. Now it's about 7% for the fourth quarter. What these mean is you can get back to record GDP, but that was more than a $2 trillion implosion in the GDP, going from 22 trillion estimate down to below 20 trillion in this quarter in terms of economic activity year over year. Well, that has some dangers built into it. One of those is a very thin market. These are the QQQs. I did 25 years here. And the reason I did 25 years, notice the NASDAQ at the end of the 90s, it imploded by 80%. And many of the valuations have skyrocketed in this parabolic increase. The market is being driven by essentially 20 names. If you took out 20 names, you have a substantial negative for the year, but those are popular and it looks very much like 1999. Valuation is going to matter as we go forward, both earnings valuations and what's that company worth. This may provide an insight into where the best bargains are. You can see the S&P energy sector extraordinarily unpopular right now, and of course they took write-offs this quarter, the major companies and a lot of the companies. But here, we're back to the same level, the valuation just above the same level as the year 2000. Notable, I showed you the NASDAQ implosion of 80%. If you go out to 2007 and you look at the energy sector along the way, the energy sector essentially tripled and the NASDAQ was still down a significant percentage from its highs. And that shift could be driven by inflation in a forward market. We'll get to more about that in the future programs, so stay tuned and be sure to subscribe each week. This is another interesting sector. Year to date, this is healthcare. It had about a 25% implosion, almost 30% at the low point, and it has rallied, but notice this little spike above these levels. That could be significant in that healthcare spending, for obvious reasons, could be permanently higher. And one of the strategies that we've been reiterating each week, these are reinvested dividends in two high yield fund examples. That's a basket of loans and bonds. You get paid interest, there's default risk in the B space, but if you reinvested, by the time the Dow hit a new high in 2012, the global high yield had returned an average of 14%, and the corporate high yield had returned about 10%, despite price risk you can see here. Now, in the future episodes, we will get more in depth as these corporate earnings unfold. So next week is going to be very important with most of the S&P reporting. Be sure to go to NetWorthRadio.com, fill out your preliminary client questionnaire to start the process for your brainstorming session with McGowanGroup, an updated plan, and we can do a Zoom meeting, or you can come down to the Crescent, meet the team that cares with safe operations, get a free face mask that says McGowanGroup and a hand sanitizer too, and a free temperature check, just to let you know we are committed to safe operations. Thank you for tuning in.
Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, Investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.